Hello and welcome to Fintech Insider Insights. I'm David Brear, CEO here at 11FS. Just over a year ago, in June 2023, HSBC Innovation Banking UK was launched at London Tech Week, following HSBC's acquisition of Silicon Valley Bank UK in March earlier that year. It was one of the fastest and smoothest acquisitions ever, with fintechs, banks, regulators, and much more coming together to make the transaction happen over a weekend. And just 3 months later, HSBC Innovation Banking launched, taking the specialist knowledge of SVB and the global reach of HSBC to enable businesses focused on innovation to compete globally. HSBC Innovation Banking UK has over 700 employees and is a specialist banking proposition for businesses in cutting-edge sectors such as tech and life sciences, and their investors for that matter as well. So I wanted to find out a little bit more about HSBC Innovation Banking, reflect on what has happened over the last year since its initial launch, and today we are really lucky to talk to Simon Bumfrey, who is the Head of Technology and Life Sciences here at HSBC Innovation Banking UK. It's great to be in your offices, super cool offices, and a super cool job title. Thanks for having us, Simon.
It's an absolute pleasure, and hi and welcome to Alpha Beta, which is the home of HSBC Innovation Banking. We can touch on the title if you wish and what that actually means.
Yeah, I was struck by the technology and life sciences side of it. Like, what double click on that for us a little bit.
Yeah, so the overarching theme across the title is one of innovation, or businesses that are disruptive. And we break it down into technology and life sciences because they come under the banner of innovation, but very distinct and different businesses and different skill sets. So we break down technology, and we'll probably touch on that in a moment or two in terms of various subsectors. And we do the same for life sciences, but the people that are within those teams and the skill sets they look at are very different for niche businesses. And we tend to employ not just bankers in these sectors, we also employ people who have come from industry. And in life sciences, that becomes increasingly more important because it is a very different language, which I found out.
Well, we'll get into that, as you say, a little bit more to kind of understand the sort of DNA of the business, what makes you guys different in that space. But I guess with it being just over a year ago with the launch, tell us a little bit more about that. You know, how did that come about? I've heard it from all different angles of like you say, I feel like there's a Netflix documentary to be done at some point of all the things that happened to make that. But talk to us a little bit about that transition. How was that period? How was that time? And where do you think you've got to over that year?
Yeah, it was a really tough time. You can kind of break it down into two parts, I guess. There was the weekend, clearly, when the acquisition took place, which was an event in itself. And then post that, when we had the euphoria of being acquired by HSBC, because it secured the future of, an institution and our people's roles and jobs, you then have to start thinking about the future and how we transition. And what we achieved would normally take, I think, normal planning and implementation would probably take around 18 months if you had enough time to do it. We had to do it in 3 months. And that was simply because of a US parent that we moved away from and who acquired them. We had to transition very quickly. So we had to do all this planning and implementation in the 3-month period, which was busy to say the least. But we were surrounded, one, by an excellent organisation in HSBC who supported us on that journey, and also the people within our organisation. I've been several jobs previously, and it's probably the most proud moment for me is to see the team, the business, not just the frontline relationship team, but the whole business come together to achieve something for our clients and trying to achieve the smoothest transition possible. So it was a very interesting period, not without its pitfalls, may I add.
Well, they all say, necessity is the mother of innovation, right? Yes. But, there's big banks out there that wouldn't be able to get a meeting together for 3 months, never mind, do all of the work in 3 months. So it's a very impressive thing to make happen.
Yeah, I guess time is a factor here. We were under a timeline, so we had to make some very quick decisions, and we had to get smaller groups together and be very nimble. We had to work very closely with our HSBC colleagues. So ironically, that was really good in terms of bringing two businesses together really quickly. So and obviously overriding this is the focus on our clients. Yeah. They've just gone through a tsunami in terms of the issues over that that weekend, which was really tough for our clients, tough for our people as well. And then you go through another tsunami of having to transition from one bank platform to another bank platform. So we had to do it very, very quickly, but in the smoothest way possible, with very much the client in mind.
And how did you manage that? Obviously, core to the business is those relationships, that engagement. Is that what helped you sort of manage that period?
Yeah, I think the engagement was a clear factor. Communication internally and externally. I mean, everyone working together internally for the benefit of the customer. And then also ensuring that we had some really good communication with clients. We had to be very transparent about what was going on. Again, because, they're just going through another difficult process in terms of coming onto a platform, change of sorting code, change of account number, helping them through that process. So that took a lot of client communication, whether that was in the form of digital via kind of HSBC Net and the digital platform, whether that was via email, whether that was by our relationship teams picking up the phone, going out to visit clients. So it was really a multitude of ways in which we communicated with the clients to keep them up to speed with what was going on.
Yeah. So I guess sticking with your customers, to sort of double click on that a little bit, who are they? What type of businesses are they? We talk about your title with life sciences and the technology, and the sort of it feels almost like they're the high growth type. The most interesting businesses essentially seem to be your customers, which is that's a pretty cool place to be, really.
Yes, it's really interesting. It's exciting and also challenging at the same time. We're working with people who want to change the world, provide new products and services that we haven't seen before, which provides us with an exciting opportunity to develop alongside them as well. And in terms of the type of clients we have, we break ourselves down into various life stages. So we have what we call an early stage practice, which is those newly formed established businesses. And that forms, I guess, the kind of critical mass of our business. We bring them on board and then we support them, we nurture them. We give them the normal kind of day-to-day banking tools that you would expect any bank to provide. But it's also then that connectivity, it's that networking, it's that support. We see, hundreds and thousands of these businesses over the years. So we know what to expect. So we guide them on that journey. And then, once they get maybe some institutional funding behind that, the venture capital funding, we then move into our venture and growth team, which is, as you alluded to earlier, David, the high growth element, those that are very much loss-making, cash-burning, in some cases, very much cash-burning businesses, and supporting on that journey as they develop their product, geographical expansion, R&D, M&A, etc., which is a really interesting journey for clients and also for us as bankers. And then once they reach that profitability or positive cash flow, then they become the more conventional, what I would say, corporate business or private equity-backed business. So it's really that end-to-end life stage. And then within that, we also segment into various sectors. So this is where the real expertise comes in, and we employ people who have a very, very good knowledge of subsectors of technology or life sciences.
That sounds great. I think I'm going to go back to the 11FS office and move our bank account immediately off the base of that one. So has that customer base changed over this period of time? Because obviously the bringing of the sort of founding DNA of what Silicon Valley Bank stood for and everything, and then the global capability, obviously, with what HSBC bring. Has that customer base shifted or changed over that period then, or?
No, not at all. I think going back to one of the earlier points I made in terms of that communication and transparency, our actual attrition in terms of client numbers going through, a very abnormal scenario was limited. It's very, very minimal, which I think is testament to the strength of relationships that we build with our clients. And not just the clients, but also the VCs themselves, the investors. We have a team that has very close relationships with investors as well. So it's the whole flywheel of the ecosystem that we had to wrap our arms around. So in terms of our client base, it hasn't changed. Our focus remains on innovation, technology, life science businesses, right through the life stage from, founding through to that more conventional corporate life stage that I alluded to earlier.
Yeah, it's an interesting one, as you say, on that without that, managing those relationships, managing that communication, limiting that attrition there. I would have thought almost the advantage, that collaboration between those two brands and the things that they bring to it, retaining the culture of a company, and then the multiplier effect of HSBC in that. I mean, it's a very strong 1-2 punch, that, isn't it?
Yeah, it's a great partnership. I mean, if you could kind of put two businesses together, it's probably the ideal partnership. Not that we wanted to go through what we did to achieve it,
Sure.
but it's ended up being a really good partnership. And ironically, when you step back from this, and we were kind of 18 months post that March 2023, ironically, we're actually in a better position. We now have the backing of a very strong brand, a very credible brand that has financial strength, it has geographical reach, and it has a product suite that we could have only dreamed of. We actually had plans in place to develop a lot of this product over the next 5 years. It's now on our doorstep. We have it now. And the skill we now have is to be ruthlessly prioritize which products we need to bring on into our offering now. And that's probably one of the biggest challenges. So as challenges go, it's not a bad one to have. It's just how we implement it. So you combine the strength of HSBC with what we had previously, the sector expertise, that connectivity into the market, the thought leadership that we provide to our clients. It's a really strong partnership. And we'll probably come on to a few other aspects as we go through the conversation, but it's really put us in a really wonderful position.
Yeah, and I guess we talk about the secret sauce piece. I always sort of say the secret sauce is sort of the way you do it, not just what you're doing. I mean, I've got friends who work here. They've said to me directly, the culture is being maintained, the culture is being added to. This is a continuation of the story. It's a thing which is great, because essentially, you see lots of big organizations pick up things and, don't really understand what it took to make them successful in the first place. But it feels like that preservation of the thing that made Silicon Valley Bank special in the first place is alive and kicking in HSBC Innovation. So that's good to see.
Yeah, I think aside from obviously ensuring that there was business continuity post-March, one of the biggest concerns we had at the time was, how do you actually retain that culture?
Yeah.
And culture is very much ingrained in people. So I believe, and I'm biased, that we have the best people in industry serving our clients. They're truly, truly wonderful. And we like to think that we hire correctly. So it's not just on experience or your background, it's actually what you bring to the business culturally, and have you got a passion for the sector as well. So that's one of the things we look to. And also I must call out HSBC. They were very, very open from day one that they didn't just want to subsume our business into this gorilla of a bank. And they've given us the freedom to develop our business. Now we have to prove it's successful and obviously deliver, but they've given us this opportunity to deliver it. And I for one have been really positively, not surprised, probably an injustice to my colleagues in HSBC, but I have been surprised on how they've allowed us to develop this business. And I can speak for my team and across the business that it's been really well received.
Yeah. And a big part of that is obviously, office space and structure. We're neighbours. We're literally just around the corner from here. So, there's a very different vibe of having a business around Liverpool Street than there is in Canary Wharf. And I imagine that must be the case for engagement with clients and everything as well. It's a big part of creating culture, isn't it?
It is. Our clients were concerned about the culture piece as well. Again, are you still going to be able to deliver and do what you did previously? And I think over the past 18 months, we've actually demonstrated that we haven't changed our culture. And you're quite right. I think having the premises and not having to relocate, retaining an entity, a separate entity as well, with a name that does a little bit of what it says on the tin as well, I think has helped retain that identity and given our clients and investors an element of comfort. Now, clearly, going forward, we have to continue to execute and deliver and look after our clients, but so far, so good.
Very good. All right, folks, coming up, I'm going to continue the conversation with Simon as we discuss the innovation landscape in the UK and what the future plans are for HSBC Innovation Banking. It's all coming up after the break. Don't go anywhere.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Hey folks, welcome back to Fintech Insider Insights, where I'm in conversation with Simon Bumfrey, who is the Head of Technology and Life Sciences at HSBC Innovation Banking UK. You have just released a quite interesting innovation update. This is with your partners at Deal Room, about how the innovation ecosystem is performing so far this year. I mean, obviously there's a lot going on in the market, you know. Businesses are dealing with all different types of things, but tell us a little bit more about that. And I guess, what role do you have as the organisation dealing with that?
Yeah, we've been working with Deal Room now for, I think it's around about 12 months and producing these reports. And for us, it's part of what we like to provide. And when I was talking about working with the kind of broader ecosystem and providing thought leadership, this is one of those areas where, you know, we're working with a partner to provide, you know, pretty much, I would say, live data, actually. What are we, midway through July here? And the reports come out up to the end of July. End of June, beg your pardon. And so that's the type of offering we have for the market more generally and our clients. And what it also does, it helps us, and me personally, look at where the money's been invested. In what sectors are we seeing coming through where we have to divert resource to, or do we need to be upskilled in certain areas even more? And another way I do that is, alongside the Deal Room report, is we have an early stage practice, which I talked about earlier, that has the real critical mass in numbers. I do an analysis, or we do an analysis of the types of businesses that are opening accounts, and we can see trends pretty early in terms of new founding startup businesses. So I just happened to do a bit of analysis for the purposes of this meeting, David, and it stacks up and mirrors exactly what Deal Room is telling us, that we're seeing companies open up in terms of clearly climate tech and sustainability, AI businesses, which were 30% of the accounts that we opened, or some connection to AI. They're around energy, you know, electronic vehicles, etc. So it really, the accounts we're opening really mirrors what we've seen in the Deal Room report. And as I say, a combination of those two factors supports me and my team in where we need to be focused and support clients, and also look to grow the business.
Yeah, that's amazing. Like you say, what they're opening to do is a great indication into what the industry's sort of attempting to solve, or gaining access for funding to solve for. Both of those things are interesting, aren't
they? And you could, you know, going back, I won't go too far back, but if you go back, a fintech, for example, we suddenly saw a plethora of different fintech businesses being opened. We saw businesses that might have some connection to space. So, you know, you can really start seeing some trends come through pretty early.
Yeah, and those, like I say, those trends over time, what's hot and what's carrying people's interesting aspiration. I guess as they grow as well, because it's an interesting point. You're sort of building this insight, doing this work. It's as much for you internally to develop as it is, and because we find as 11FS, actually a lot of the best content ideas come from things we want to learn about that actually then we externalize. It sounds like a very similar thing.
Exactly. So we've seen a good number of life sciences or medical devices accounts open. So, you know, I look at our team and I think, have we got the skills, the required skills to support these businesses? And where we haven't, it's incumbent upon me to go crawling to the CFO and say, please give us some money, you know, we need to look after life sciences. And more often than not, I do get that support. But then we hire bankers, as I mentioned earlier, but we also hire people from industry. So life sciences, for example, is such a niche area. So we've hired people that may be accountants that have worked and focused on life sciences businesses. We've actually hired people from Brear, And having an analysis of where the funds are being deployed, having an analysis of numbers of accounts are open in certain areas really helps me get ahead of where the industry is going.
Yeah, and I guess at those different stages, we built a UK challenger called Metal with NatWest.
NatWest, yes.
An interesting thing that I always kind of found when we were building those things out is the problems that businesses have at different scale points.
Yes.
Most businesses don't get to that scale up, medium scale. But actually, with the businesses, you're dealing with rocket ships, and not literally businesses building rocket ships, but the scale of those things and the scaling of those things is the problems those businesses face are really unique, aren't they? In terms of, you go from 15 to 50 to 500 to, it's big differences in those businesses. I guess the learning those problems and those pain points is a big advantage to supporting them as well.
It is. As I said, we've had, hundreds and thousands of different sectors and businesses go through the platform over the years. And that's why we break it down into a life stage for exactly your point. The issues that an early stage business that's just been founded, their issues are totally different to the next stage where you've suddenly got institutional money in, because you've got to look at the product and the delivery in the market, but you've also got to think about other stakeholders now. So it's, and we have plenty of experience, so we can help clients on that journey. We can help them engage with maybe investors that are focused on that particular subsector and make that necessary introduction. And we have people that are skilled in that area and have that networking capability. So that's a big factor.
Yeah.
It's a big defining factor in terms of our service offering.
And I guess on that side of things, not only life stages, but I mean, looking out the window, the world shifted. We're COVID, and London, every corner there was somebody giving away £1 million to build a fintech startup. It seemed, So actually, the world shifted quite dramatically. That must have affected those types of businesses as well.
Yeah, it's probably been the biggest challenge over the last year and a half in terms of finance. As you quite rightly allude to, if you go back kind of 2 years, the speed of various raisings, you were probably companies, generally not every company of course, but companies were probably raising every kind of 6 to 9 months because there was that cash there.
Permanent team doing it.
Absolutely. And that actually takes up a lot of time with the business as well as the investors. But the power was with the company at that stage. They could command maybe some big rounds of financing. They could compete and set off, VCs against one another. That's totally reversed now, as you know. And what we're seeing is longer financing rounds. In some instances, those financing rounds may not happen now. So what do businesses have to do? They have to really pivot from expecting a financing round to actually looking at their business model and becoming profitable and cash generative. And we have a lot of examples on that. And that's where we're here to support, again, because we have experience of going through various cycles that we can help management on that journey.
Yeah, that's an interesting pivot, isn't it? Startups are used to pivoting from product market fit ideas to ideas, but from sort of land and expand strategies to solid grounds and foundations of profitability. That's a different space, isn't it?
It is. And I think what we've also benefited from is the partnership with the VCs themselves. We work with a very close knit. Now, if I said 100 sounds a big number, but we have very close knit relationships with a large number of VCs. So even when we're going through this transition, it doesn't mean that the VCs won't support them. It might not just be new investment into the business, but we're finding that VCs are supporting that businesses through that transition alongside support from ourselves. And that's going back to that secret source point that you mentioned. That's one of the angles that we're very proud of, is that we're not just in this for transactional, and neither are the VCs, and it's very much a partnership approach.
Yeah, and that's an interesting point. Again, is in a world we often say sort of the things that we're building is digital is sort of a part of the answer, but it's not the answer. A lot of the move with innovation for digital is self-service and, customers doing all the things on their own and, picking from a list and doing, and that's not what I'm hearing. And it's not what I hear from, the people who work with you or your customers either. It's people, it's technologically enabled people, which that's a different proposition in a world of, scaling self-service.
Yes. I kind of break it down into two parts. I think you've got that, what I would call the BAU solutions that we should be providing to a client. So online digital platforms that you're very familiar with. And there needs to be an element of self-serve. And it's probably more efficient and productive for the client to do that themselves anyway, in terms of payments and salary payments, etc. Check and balance. And, that is efficient for the client themselves as well, if you give them a really good platform. And we believe we're giving them a really good platform. And then the other side is, once you free up the time of your relationship teams to then focus on the value add. And the value add, as I alluded to earlier, is really the networking capability, producing thought leadership. Speaking to clients that are coming through that growth stage, we often get asked the question, when's the right time to hire a CFO? When's the right time to employ a chief marketing officer? We get all those questions, and that's where our team, or my team, is out there in market helping clients on their journey.
Yeah. You must have a lot of fintech clients, and actually, obviously, it's been a bit of a weird time in the UK fintech market. The changes with, again, I've said Brexit a few times in this, but post-Brexit, the changes in visas, the changes in funding, that it's been a bit difficult, I'd say, sort of bumpy road. But how do you see the market now?
It's a really good question. We were having the same conversation probably 12 months ago. And, when I talked about understanding which sectors the accounts were opening in, fintech dropped. We saw that. And then you look at the funding into fintech, it dropped. What we're starting to see is, I don't think resurgence is the wrong word. But nonetheless, we are seeing a pickup in fintech. Now, some of that's skewed by some really big mega rounds, the Monzo rounds, etc. this year. But fintech is the number one destination for funds in the UK up to the half year. Skewed, as I say, by some 2 or 3 really kind of large mega rounds. But at the same time, we are seeing more activity with our fintech businesses. Now, why is that? I think it's probably some of the reasons you just alluded to. I also think that if we go back 2, 3, 4 years, 5 years, there was a lot of kind of businesses, single product businesses that were developed. I think it's got to the point now where maybe you're going to have winners and losers. And as you know better than I do, technology moves very, very quickly. And therefore, there are going to be winners and losers. So I think there's going to be a bit of, what we're seeing is probably a little bit of acquisition, a bit of merging, and also some businesses that are actually not going to make it in fintech. But that's done is stimulated activity in the fintech area. And also, with the new government coming in, and everyone feels a little bit more positive generally at this moment in time, particularly about the City of London. And I truly believe we're going to continue to see investment in fintech going forward. And we're super excited. In fact, we've just hired a new head of fintech to help guide us through this particular journey.
Fantastic. It does seem like the cycle, every cycle sort of has an end, and the beginning's not far after that. But it feels like there's a new beginning of a new cycle with, as you say, with the government changes and everything that goes with it.
Yes.
It'd be interesting to see where that investment goes, because obviously a flurry for retail banking and, SME banking 2016, 2014. But I wonder where it will go now. Obviously you touched on AI is everything, in every slice.
Yes.
It feels like there'll be a lot of activity in that space in the next 2 to 3 years.
Yeah, I agree. And, let's not forget where London sits in terms of the financial capital of the world. And a lot depends on what goes on on the broader economy as well. But that's starting to feel a little bit more positive. So our position is London, and I should say the UK, not just London, because there's a lot of good stuff going on outside of the London region as well. But if you see where we sit in terms of Europe and the different currencies that are used around, we sit beautifully within the globe to continue to play, I believe, a pivotal role in the fintech community going forward. And I personally am really positive. I'm not going to pay too much attention to what happens in Q3, because Q3 is naturally quieter. And as you quite rightly said, we have seen a number of large investments, but I'm really interested to see how that theme continues through Q4 and into 2025.
There's been a lot of talk in that regard of Paris and Berlin and various different places sort of taking the crown from the UK with that regards.
Yes.
But it does still feel like all of the ingredients are very strong here. Would you still say we're a leader in the fintech space?
Yes. Yeah. very black and white around that one, yes. And I also think if you look at the investment that's going into Germany and France, combined, we get more investment into the UK broadly, on a broad basis across the innovation sector. Now, clearly, we can break that down, but as I said earlier, fintech is the number one year to date. Will it hold that position? I don't think so, but I still think it's going to be a sector that continually gets invested in.
Yeah, exciting. What comes next then? Obviously, I mean, we're coming rapidly to the end of this, so we better keep this one reasonably short. But
yeah, for sure.
Your opportunity supporting all of those different types of businesses, the scale of aspiration you guys have got to. What comes next for HSBC Innovation Banking?
There's a few angles to this. I think one is the ability to roll out a global innovation banking brand. So we currently have 4 hubs. The UK, we include Sweden and Denmark in that because they're part of our existing business. So we have the UK, we have Israel, we have Hong Kong, and we have the US. So we have what we would call 4 key innovation banking hubs. We've recently hired a head of Europe, so we're working with our European colleagues to build out a innovation bank within Europe. And, and if you think about the scale and size and global reach of HSBC, I'm working with my colleagues in HSBC and we have corridors into the Middle East. We have corridors into China. I was in China myself 3 weeks ago. And what a wonderful opportunity in terms of size. Now, there's always the argument of, do you want to be in China? But I think there's certain subsectors of technology and innovation that are ideally suited to go to China. And then you've also got India as well. So if you look at these massive global areas that potentially we can expand to alongside our clients, and our clients lead the way. These are not areas that we're saying, oh, go to the Middle East or China. Our clients are telling us where they want to go, and we now have the opportunity to follow them. And what I think I'd add to that is, and I mentioned it at the very start of our conversation, is this kind of product set that HSBC has. We can now take advantage of private banking for all, when our clients are selling their businesses, we can now loop them into private banking and private wealth, etc. And then we can also help those businesses that do want to expand and become real global players. We have the investment bank itself, which is something we didn't have before. So 2 very different product subsets, something we didn't have that we can now offer our clients. So when I look ahead, I'm super excited about what we can do. And it fits into our vision of being, the number one client-centric bank for innovation clients across the globe. That's our vision, and that's what we're set on being.
A few small geographies there. India, China,
lots
the
of
Middle East,
Yeah, it's that ruthless prioritization that I was talking about. And speaking to our clients and understanding, where they see the opportunity. Yeah. Not just from a sales perspective, but also sources of capital as well. That's going to be increasingly important as we go forward, having that source of capital and understanding where that's coming from.
Yeah, it feels, and I think a little bit back to the cycle that we've seen here, it feels like actually businesses that have been successful in London have an amazing springboard now to be successful in all of those other geographies. Yes. It's I don't want to paint the UK like a little test bed, but essentially if you can be successful in London, or if you can be successful in the UK, there's a very high likelihood that you can scale that into the rest of the world. Essentially.
I absolutely agree, and I think fintech's a great example of that. I view kind of London or the UK as a sandbox for fintech. Actually, you have a regulator that's good, that allows some flexibility, and we do try things, or our clients try things. So I think it's a very well positioned. Well, the UK is very well positioned, to continue to be a driving force of innovation, and we're number 3 globally. We have a long way to hit US and China, but we're in a very, very good position.
Fantastic. Well, that feels like a pretty decent place to leave it, and we'll come back and have another chat a year from now and see how the market's developed, to see how the change has gone on. But that does wrap up today's discussion. So a big thank you to our special guest this week, Simon. Thank you very much for joining us. Where can people learn a little bit more about you and the report that you're putting out as well?
Please reach out to my LinkedIn. So that's Simon Bumfrey, and also the HSBC Innovation Banking LinkedIn, and I'd gladly loop in with anyone.
Fantastic. As for me, you can always find me lurking on LinkedIn. Thank you ever so much for listening along to the show. If you like what you've heard, follow our podcast. Don't forget to leave us a review, as it makes it easier for other people to find the show and helps us make it better as well. As always, if you want to join the conversation, you can find us on pretty much every social media channel at this stage. Just search for 11FS or Fintech Insider, or if you really want to, email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye. Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak, so sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-sized goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.